What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video I will show you the mind-blowing letter that probably will be extremely important for the community and for our battle against illegal activity of fraudulent hedge funds and authorities. And I will show you this in just several minutes. And for now, I want to ask you to hit the like button, subscribe to my channel, share this video with your friends and family, and hit the notification bell. Because right now it is extremely difficult to find necessary information, and it is extremely important for MMTLP community to unite in order to fight against the illegal activity of fraudulent hedge funds and authorities. And for me, it is also extremely important to help the community. And I want to ask you to hit the like button and drop me a line whether or not you want me to continue my work. And basically that's it. Let's start with the news. So, first of all, I want to start with this tweet that was retweeted by John Burda, the former CEO of Torchlight Energy. And this is quite an interesting picture with Eddie Murphy. And it says, don't have to buy back illegally oversold short MMTLP positions if bodies at FINRA halt trading. And this picture describes for 100% the entire problem for MMTLP, because just think of it like this. If you are a short seller and, for example, if you sell the shares of some asset for about $10, you expect to buy it back at the price of $5. And in this case, you will book the profit for about 50%. But if you sell an illegally issued shares, the synthetic shares that you shouldn't buy back, this means if, for example, you sell it again for the price of $10, you will not be forced to buy it back. And this is 100% profitability. And if you multiply it by the infinite number of potential infinite number of synthetic shares that might be created out of thin air, definitely it will show how big this problem is and how enormous this type of profits. So, and let me show you the news that definitely might be a bombshell for the community and for our battle. Right here on KeyBassa777 Kevin B Twitter account, you can find the tweet that he posted on March 30th. And he wrote, "It seems like no reply is forthcoming." And this is the letter that was sent to Denise Dombey at FINRA.org. And Mr. Kevin Berthold wrote, and let me quote you the entire letter. "Dear Miss Dombey, I am writing to you as a courtesy from one finance professional to another. As someone who did my external auditing stint at PwC, going on to spend more than 10 years in internal audit and computer audit, having done more fraud investigations than I care to remember, having been CFO of a listed company, I can relate to you, the companies and the investors. I want to be proud of my alma mater and my profession. I am aware that FINRA has at the very least snooped on me, and I am a little afraid. However, I've never been able to allow my fear to stop me from standing up from my ethical convictions. Also, I am not an MMTLP investor, have never been, and I am unrelated to anyone that is. With that background, I want to draw your attention, you might know it backwards, to your FAQ statement regarding MMTLP, particularly question number 9. As they say, this is not a financial nor legal advice, not that I should be worthy of rendering it anyway. However, for what it is worth and because I want to be helpful, I am strongly of the opinion that it materially exposes FINRA to substantial criminal liability for enabling and calling for institutions to yet again default on their liabilities for purchasing the shares that they have already purportedly sold, have taken the money for, but still owe. The fact and the FINRA'S admission in its statement indicate that there is a deliberate intention to sustain this default yet again, despite knowing the settlement is due and knowing the magnitude of the default. In my opinion, there should have been no liability in the first place. The notion that institutions can take money for purporting to convey ownership of that which they do not own is preposterous, exceeded only by the ludicrously of the loopholes that enable the racket to bizarre magnitudes, beginning with the falsehood of sheer borrowing. That aside, however, having allowed those liabilities to remain unsettled before the merger and reverse listing of MMAT took the criminality beyond excuse, since MMAT was a completely different business. No way liabilities for TRCH should have been allowed to be substituted with liabilities for MMAT. That was strike 2. Even knowing that the pref share dividend was being declared, FINRA and its members refused to ensure the settlement of liabilities for MMAT shares and allowed those liabilities to be replicated into liabilities for what would become MMTLP. That was strike 3. Now, in your question 5, you are going to strike 4, alleging that it is perfectly good for your members and their cohort institutions to continue reneging of settling their liabilities and have those liabilities substituted with liabilities for completely different securities in a completely different, unlisted, not intended to be traded company while leaving 64,000 plus shareholders with counterfeit shares. My conclusion, and I suspect that any court's conclusion will be, is that all of this convenience is aimed at never settling the liabilities, just keeping the loot and kicking the can down the road for years until all efforts at running the company have been exhausted. And this just one of point in your statement and just one company. Do we really want to repeat Enron and WorldCon, Arthur Anderson? Is it not time to cite ongoing the right thing, force the settlement of the liabilities for the sake of all our credibilities and reputations? I know, the expectations of shareholders range from punitive to bizarre, but why not ensure that they are made an offer that at least 90% of them feel unviolated? Maintaining the current stance has a small percentage chance of succeeding, but if all of this exposed and the magnitude is exposed, I will not stop at MMTLP and 100,000 investors. Every citizen and people the world over will know, is there a consequence, no obligations stemming from selling what you do not own and persisting in defaulting to deliver it. It's time to do the right thing. Sincerely, with best wishes, Kevin Berthold. So, shout out to Kevin Berthold, and I have to say that this letter was written extremely professional, and I have to say that he has a very strong background in law and in auditing. That's why he just describes in 3 paragraphs the entire situation and how FINRA did the wrong FAQ section. And right now I have to say that we have more and more evidence that something is wrong, and another evidence is this video. It was published just 1 day ago by Kiyumi Hawa, and she called to TradeStation Group Incorporated, and she asked the question why did their shares that she transferred to AST was returned right after it hit the AST account. And basically it might be the evidence that these shares from TradeStation, the MMTLP shares, was illegally issued, and this is a counterfeit share. But she bought these shares from her brokerage legally for 100%. And this means brokerages have to settle this problem with FINRA, with authorities, and they have to make some kind of conclusion in order to solve this problem and in order to help more than 65,000 investors in MMTLP to receive either their shares or their money with a premium to cover all their losses. So, I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants, so you better go live it.